Hi, and welcome back to the European VC, your podcast for insights into the European VC industry. If you love our show, do drop us a review, share it with your friends, and join our Slack community at theeuropeanvc.com/community. And don't forget, if you are about to raise a fund or an international round, do let us know and we'll be happy to introduce you to relevant investors. Today, we're happy to introduce you to Andris, Managing Partner at Change Ventures, the first and largest truly pan-Baltic pre-seed seed fund. Change Ventures backs ambitious Baltic founders and are searching for founding teams that have the grit to succeed. Andrus was also recently awarded the Human Development Award by the President of Latvia for an outstanding contribution to the future of the nation for his work with startups and tech hub Riga. Before starting today's episode, we'd like to introduce you to 4 Degrees. 4 Degrees is the VC Relationship Intelligence CRM that helps you source and close deals in less time. Built by VCs who recognize the power of relationship networks, 4 Degrees will transform your network into a living, breathing engine of opportunity by automating the deal-making process. To learn more about how 4 Degrees can help you leverage your firm's relationships to move deals forward faster, visit 4degrees.ai/EUVC.
Andris, welcome to the European VC. We're so happy to have you with us.
Thanks. It's a pleasure to be here.
Andris, before we start, I just want to take the time to hear a bit more about you. You've built what I think is a super impressive fund in the Baltics, and I just want to hear, what's it been like? What's your journey? You started out with a quite small fund, and now you're at 50 million, just closed last week. So super exciting.
Yeah, thank you. So myself and actually my 2 original partners, we really started on the operating side. So I spent 25 odd years in startups in the US, Israel, UK, elsewhere in the Nordics and in the Baltics at C-level as a founder in various roles, bankrupted a few companies, so done everything that needs to be done to have empathy on the founder side. And my 2 original founding partners are the same in terms of their backgrounds. And so we were increasingly involved in the fast-growing Baltic ecosystem here in various ways, and basically spotted an opportunity to build a fund at what we think is the most interesting stage of investing, really early seed, pre-seed. Together with some US partners investors, we raised a first fund around 2019. It was a small concept fund, you could say, around 5 million. We invested in 9 companies from that fund. A couple of those are doing really super well. Interactio in Lithuania raised a 30 million A round last year, and a few others are doing very well. And then 2 years ago, we did the first closing of Fund 2, which was anchored by EIF. That first closing was 21 million, and it's taken a little while to get to the final closing. So here we are 2 years later, but we have done the final closing now at 49 million euros, and that makes us the biggest seed fund in the Baltic states. Really, that is sort of the most important characteristic. We're purely focused on this region. And so we're a sort of mostly sector agnostic, regional focused fund. So we're investing pre-seed and seed tickets, anything from around 400K to around 2 million initial investment, plus follow-on capital. Our portfolio reflects sort of what you generally see in this region. So a bunch of fintech, e-commerce, retail, some B2B, some B2C, and some deep tech in the form of robotics and a few other investments. And so our shtick, you could say, is that we spend lots of time meeting founders very, very early, building relationships and trying to help them and the ecosystem grow, and then trying to spot the outliers and be able to invest at seed mostly, and then back them up and help them raise the next rounds. And so this region is super exciting, which is why we have no need to go beyond it. It's growing like crazy. We just released our latest Baltic Startup Funding Report that we do twice a year. It shows that last year, Baltic startups attracted almost €1 billion in funding. It's super exciting. And, sort of the thesis that we're advancing is that we think this region can become like the next Israel. So 3 small countries, small populations with entrepreneurs who have the talent to build born global companies that can scale into massive success stories. You have a long list to take as examples, starting with Skype, then most recently Vinted and Verif and Pipedrive and Bolt. Yeah, so that's a long-winded way of giving you the intro.
Thanks, Andris. And I think congratulations are in order because of the final close. That's awesome. I think what would be interesting now for our audience is actually continuing that line of thought and deep diving a bit on the region, on the Baltics. Give us a quick rundown of, for people who do not know the region, who are outside of the region, how would you describe it to us? Why is it exciting? What's happening? What makes you so excited about investing in the region?
So I think there's kind of a unique set of characteristics that come together. So as I said, overall population is small, so the local consumer market is tiny. Like Estonia, the smallest, 1.3 million people. Like, you do not really want to launch a consumer business that is purely focused on Estonia. It's just not that interesting if you want to build something big, right? So there's just not enough people. So what you tend to see is that the ambitious founders, like the ones we want to back, from day one, they're building companies that are aimed at much bigger global markets. It might be Western European markets, it might be the US, it might be South America, it might be Africa or Asia. And so from this region with a small population, you have a sufficient talent pool that has repeatedly gone and done this and built companies that scale in big markets. And just like in Israel, because that ecosystem is relatively small, we believe the knowledge transfer among the founders and the lessons learned and the capital transfer is happening much more efficiently and faster. So in London, you go to a tech conference and you might see the most successful founders on stage. In Estonia, you go to Latitude 59, which is the biggest conference every year, and Taavet Hinrikus will be wandering down the corridor. Founder of Skype, Wise, right? He's worth billions. He'll be just wandering down the corridor chatting with everyone. And so, the proximity of the ecosystem, the closeness of that means that the transfer, I think, happens faster, and it happens in 2 key ways. So one is knowledge from both founders and senior management at companies that have really scaled huge. That knowledge tends to more quickly flow into the next companies that they're founding. And then they have angels who are their former co-workers who are helping back them. And so this transfer happens faster, and the capital is getting moved to the next company quite rapidly and efficiently. And so that we saw happening in Estonia for years, and now it's repeating in the other countries.
Yeah, because that was actually my question. If to what extent can you think of the Baltics as one country or one ecosystem versus is it 3 different countries? And if you're a founder in one, you don't necessarily know the founders in the other countries.
So there's a little bit of one and a little bit of the other, right? So the reality is somewhere in between. So of course, they are 3 separate countries, 3 separate languages. The founders have, the closest affinity with their community, which is partly why, we'll talk about how our fund is organized. We have feet on the street, people locally in each community. However, there is a concept of the Baltic states as people look at it from the outside, which has been, in history is well established. And because these countries are small and because they have a shared history over a long period of time, mostly a history of other big nations invading us, there is a common bond between the communities in these 3 countries. And this physical proximity is close enough that there's quite a lot of interaction. To give you an example, so I co-founded a foundation in Riga, Tech Hub Riga, that was doing the first meetups here and the first hackathons and everything. Very early on, we got together with the Garage 48 guys, who were the best in the region at organizing hackathons, and they would regularly come down and run the hackathons in Riga. And it was great. So we had interaction with them. There was more, the network was growing. And so these kind of interactions have been happening for years already. And so I'd say there's quite a close set of connections across the 3 countries. And so we think there's, great benefit to be had from that. And so, we think you can think of them as one region, obviously with 3, separate communities within that.
Yeah. I'm also curious to hear your explanation and your overview of the investment landscape in the region. So now we're talking more about the founder side, the innovation side, and now what about the financing side? What's the landscape like?
The startup funding report we released just now clearly shows that the funding environment is maturing. So, $1 billion almost, or euros over $1 billion deployed last year in Baltic startups, that is driven by large growth rounds. Bolt had a massive round last year, quite a lot of Series A rounds, so very sort of consistent, funding of large startups that are scaling up massively. And so, that is the big change over the last few years. So if you wind back the clock a few years ago, it was mostly pre-seed, seed rounds, small companies, very early stage. There wasn't really a track record of big success and scale-ups. And so that funding environment has changed. And now, especially with the pandemic and the realization that investments can happen all over the world, often over Zoom, we have the big investors from the US and Western Europe very regularly looking for not just early small investments here, but looking at investing in big growth rounds in companies that are scaling massively. And that's definitely changed. The second thing that's probably changed the most is the proliferation of angels. So this success has, of course, led to a bunch of exits and a bunch of secondaries, which nowadays happen earlier and earlier. And so you have quite a large pool now of angels with specific experience in the industry, which are the most valuable kinds of capital at a very early stage to bring on board. So that's all great for founders.
Yeah, and I think that our next topic is going to be firm building, but let's dive a bit into that because angels play an important role in how you build both your fund, but also your investment strategy. So do speak to that. I think it's super cool, Andrus.
So yeah, angels are important for us, especially as a local generalist fund. We will never be able to, in a small team, accumulate all of the specialist knowledge and experience in all of the different kind of fields that our portfolio companies are operating in. And so it's really important for us to bring in other co-investors who have that specialist knowledge. And angels are often a good way of doing this in the sense that you have experienced people who have specific knowledge of maybe a type of a business model as well, might be marketplace specialists. So we had an investment in Gelitex, which is a supplier to the cultured meat industry. And, we have some co-investors who really understand food tech, much better than us, right? So we have a great relationship with the founders. We can help them with all sorts of things that are, you could say, somewhat generic around building a startup. But as it comes to food tech and understanding that industry specifically, we have co-investors that know that really well. And the same would be the case with some of our ed tech investments or robotics investments, especially any that are in really specific fields. And so angels is part of that strategy. And, we also have some angels who are LP investors in the fund who we regularly collaborate with and share ideas and investment opportunities with, and that are also backing us as a fund.
I think it's super interesting that you've actually set up a vehicle specifically to bring in angels into your LP. I'd love to hear your thinking around that, the hassle. We have a lot of emerging managers listening in and everyone's thinking about how can they strengthen the ecosystem around them. Super close to what we're doing. Sorry, I'd love to hear more about how you've done that and your thought process.
So it's still, I'd say, at the experiment stage. So the experiment we did was we got together with a local financing company that we know well here in Latvia, and they organized a feeder fund which gathered up angel investors that were investing in that feeder fund that then becomes an LP in our fund. And it is an experiment. We are going to see how this pans out, how it works, but it does allow us to bring on board, people who are sort of close to us, who we like to collaborate with, and who we would like to have a vested interest in us succeeding. And so even more incentive to help us and help our portfolio, but who are not able to afford, the minimum commitment to be a full LP. And so this kind of vehicle helps us do that, It has some legal and operating complexity, which we're trying to manage through, but having a feeder fund, we think, is one way that maybe this can be done. So I'll probably need to report back in a while as to how well this works, but this was our first attempt.
But you can definitely report on your thought process. And I think also contrast it to other ways, right? Because I kind of liken it to a scout model, just saying that it's just another model of working with scouts. I'm curious to hear your thought process.
Yeah, and so the thought process is really the driver is simply involving people who we want to be closer to in terms of working with the fund. And they may have a function of sort of scouting deals, some of them are referring other founders to us, which is great, but some of them are also people who are valuable post-investment. So we have one guy who's spent many years in the insurance industry and will not be someone we will involve in every single portfolio company, but there will be occasions I foresee over the next years where his particular background and experience might be useful for one of our portfolio companies. And then we have someone who, when I ask for some help, they're quite likely to respond and find some time to be able to help. That's kind of the simple equation.
Now let's jump into the topic that we always love, which is firm building. And I think the natural question is to say, what has gone through your mind going from a 5 million euro first fund to now a 50 million euro second fund? That is quite a big jump, so I'm excited to hear this.
There's a little background to that 5 to 50 million jump, in the sense that the original plan for Fund 1 was actually to be, a 30 million fund, and it simply got preempted by EIF backing a separate vehicle that became Fund 2. But, all along, we've kind of treated the fund management process as a startup in and of itself. So we believe we're running a startup, and we're constantly trying to learn and improve the way we operate in order to be more successful. And so one of the key things for us has been covering these 3 distinct geographical markets that are close by, but they're still, separated by a few hours in a car or an hour on the plane. And so we do believe it's important to be deeply embedded in each of those separate communities. And that is why we've actually started as a distributed fund, myself based in Riga, my 2 original partners are in Tallinn, and we hired a now senior associate, Gabriela, who's based in Vilnius. And we feel it's important to have these local connections in the local community, at the same time be able to get together and run a firm that operates across these 3 countries.
You said something really interesting, which was Fund 1 was intended to be a 30 million fund, but we got preempted by AF wanting to to do the second fund. To what extent can you shed some light on that process? Because that's extremely interesting for emerging managers listening in.
I can shed a little bit of light in the sense that we were discussing for a long time with EIF about joining Fund 1, and in the end it became more advantageous for everyone to just sort of package that up, leave it, and start Fund 2. And so there's more detail, behind that, but in the end that became the obvious kind of way to run things. And for certain reasons it was convenient for us as well, and so that's what we did. There is definitely a huge difference between having a 5 million fund and a 50 million fund, not just in terms of, some more resources to run the fund, but there's more complexity, more LPs, more investments and everything. So it's definitely something we're learning to grapple with, but we're also very grateful and fortunate that we have LPs who have backed us in building a bigger fund, and we think this is, the right size to be able to deploy meaningful investments in this region.
I was about to say not a day goes by, but maybe it's not a week goes by where David and I don't talk to an emerging manager that has a plan to raise a 30 or 50 million euro fund. And just yesterday, I said to one of these, thinking like that is a bit like thinking that someone should pay your train ticket to the audition of the X Factor. Because your first fund, it's about showing that you can actually do the work, and then you can do a bigger second fund. It's almost like that, the market, because everyone wants to do VC these days. So don't imagine that someone will also pay you a fat management fee for that. I'm curious to hear, because you started 3 guys, you had 5 million secured. You had a good feeling about the AIF and other LPs that would come in for either make the first vehicle bigger or create a second vehicle. But the thought process of you as a team saying, we're going to do this, I'm super curious to hear, where do you know each other from? Where did you get the conviction from? What kind of conversations did you have?
So we know each other. I know one of my partners, Uria, for quite a few years. We were both on the sort of investment or advisory committee for a startup accelerator called Startup Wise Guys that started in Estonia. And I was involved in the kickoff of that. And then Uria came back some years later saying, Ian Wright, they're looking at putting this together. Do you want to join us? And actually, I'd say that one of the really important parts of getting to a bigger fund, one of the big lessons learned was find any way you can to make actual investments, put money in the ground as proof points of your ability to collaborate together, your ability to pick. At first they're interesting, later they may be successful, but at least interesting companies that LPs are attracted by. And so we did a bunch of pre-closing investments even before closing the first fund, which changes the conversation that you have with LPs. So I think it's very different having a sort of a theoretical discussion around, I'm going to raise this size of fund with this strategy of this kind of company, with this kind of stake that we're going to buy, etc. That conversation is so theoretical and so only driven by, who these people are. It's very different when you even have just 3 examples, right? So here's 3 investments we've made, which will be moved at cost into the fund, right, when we do the first closing. And you have a completely different conversation with LPs about, what are these companies? Why are they interesting? How did you get to them, right? Because they're specific. And so my main advice to anyone looking at actually raising a fund is either through your angel portfolio, where you can warehouse some investments into a fund, or find some way to do pre-closing investments, and have something very tangible to talk about. And so that is, definitely one of the things that I think helped us in the conversation with LPs.
Could you speak a bit to the constellation of that €5 million first fund? Who were your first backers and how did you get them to jump?
So the first fund was actually a US Delaware registered fund, and we had actually a couple of GPs who were US investors who were also helping raise this fund. And actually there's a man who has unfortunately passed away since then called Harry Hugi, who was you could call him an Estonia-phile. So he traveled to Estonia before the regaining of independence from the Soviet Union, fell in love with Estonia, has helped in many different ways since then as a philanthropist, and basically had an idea about, we could do a fund, and we were helping him execute that idea. And so he brought some of his buddies who invested. I brought in some of my friends as initial LPs, and that's how we raised the first money. One of the big advantages of initially having a purely private fund was we were able to structure the fund thesis and everything, in exactly the way we thought it should be done. And that's easier done with a private investor than with a large institutional that then may come with their preconceived ideas of, what the thesis should be and so forth. And so then that was kind of the little proof point that helped then EIF become comfortable that we're going to raise money, we're going to be successful in making investments. It's the same as a startup, right? You build an MVP, you get some early customers, you get some traction, and you keep, repeating this story again and again. And, as a fund manager, I think it's kind of similar.
How does your deal flow kind of strategy pan out? And I'm also curious to know, in the Baltics region, what are you seeing? Are deals very much concentrated in the capitals that you just named? Or do you see interesting activity outside, even though, I know that the countries are small, but I'm really curious to understand the dynamics, actually.
Let me quickly answer the second question first in terms of geography. So the 3 countries are a little different. So Estonia has 2 larger cities, Tallinn and Tartu. 99% of the deals are from Tallinn and Tartu. Riga is very capital-centric. So Riga is much the biggest city in the country. Almost all the deals we have in Latvia come from Riga. And Lithuania, again, is more spread out. So Vilnius, Kaunas are the 2 biggest cities, and the investments are coming mostly from there. In terms of deal flow in general, so as I said from the beginning, our focus is founder relationship driven. And so unlike a fund in London that is looking to invest in, AI startups all across Europe and that is looking for sort of that needle in a haystack, we are going through pretty much all of the haystack in the Baltic states all the time. And we are trying to identify who are the best founding teams in that region and get to know them, even before they launch or as they launch. So before we're investing. And our approach is, genuinely to try and see if we can help these founders be successful early on. If we can show that we can help them and be useful, then we have a better chance of building a good relationship and winning the right to lead an investment where we would like to. And sort of that's our attitude. And so if you look at our Fund 2 portfolio, actually, in half of the companies that we've backed in Fund 2, one of us knows at least one of the founders for 5 years or more. So long time relationships. And so the difference between us and a fund from London flying in to try and do a seed deal is we know these founders really well. We can reference them in the community. They know us. They've had a long time to find out, about us. And so these are personal relationships. Because in the end, I think this is a trust business, right? You want to work with these people for years and years and years. You have to trust each other. There's no time to go through all the legal details of all the transactions you might want to do. It's a lot around trust. And so that's what we're trying to build.
Yeah. To what extent are these pedigree founders or repeat founders? Because I guess that a lot of your deal flow work is also to some extent ecosystem building, but I'd love to hear your thoughts.
It's a mix. We have both backed, very experienced founders who have previous very successful startups, and we've also backed first-time founding teams. We will do both, and we think there's opportunities for both. And if you look at sort of the recent successes in the Baltic states, I mean, we just, we're an investor in Verif, led by a young, he's not even 30, a young CEO for whom this is his first startup. He's now got a unicorn on his hands, extremely talented, right? And so we do believe this is possible and repeatable. And so we are definitely backing first-time founders. At the same time, there is a lot of value to experience as well. And so we will look at both.
Yeah, of course. So you and your partners are actually covering 2 of these countries. And then, if I'm not mistaken, you said a senior associate covering Lithuania. It is a bit different. My perception, at least from the outside, to have a partner, to have a less senior element of the team covering that region. What are the challenges that come with that? And how did you, as the partnership, how did you kind of look at it and deal with the challenges and mitigate potential risks from that?
So the Lithuanian market, I was from day one super involved myself in building relationships there and in sourcing our investments there. I've spent a lot of time building relationships there myself. And Gabriela has simply supercharged what we do down there. She is an unbelievable relationship builder and has very quickly built very strong relationships with the founders and other investors down there. And so together we work as a team. We did go out very publicly, also see if we can find the right fit as a partner that would be based in Lithuania. We talked to everyone we could think of potentially working with, and we didn't find the right fit for us. It's a very complicated thing bringing a partner on board a VC fund. I could say it's a super high risk hire in the sense of it's a very, very long-term, illiquid relationship. There are very few people who are actually have the experience to qualify. Not just that, but we're looking for people who have actual close relationships in a very small country ecosystem. So, and they have to actually be available and interested in this career opportunity at that right time. That reduces your pool of candidates very significantly. Basically, we decided Gabriel is doing such a fantastic job. We don't need to necessarily hire a partner there now. Actually, Kat Silats, who joined as a partner now in Estonia, is someone that we know for quite a long time and that brings a lot of complementary experience to 3 original partners in the second fund. And so we're very happy to have her on board. She'll be based in Estonia. As a team, we're also traveling across all 3 countries. So we live on Slack day to day. We have regular meetings in sort of Tallinn as the headquarters, but all the investment team is also coming to Riga and Vilnius on a regular basis to meet with our portfolio companies, to meet with new potential investments. So we're working together across all 3 countries.
I really think that we should dive a bit into this living on Slack and having remote teams. I just saw Fred Destin posting the other day that he was back in the office and VC was a spontaneous business. It didn't lend itself very well to not seeing others, not meeting them in the hallway saying, I've got this idea, or I'm trying to figure this out. Could you come in and then drag out a whiteboard? I'm curious to hear that is the nature of your business. How do you work with this?
We do live on Slack day to day. And so we have, for better or for worse, we've developed a cadence where we are perhaps communicating differently than other funds in terms of the internal communications within the team on topics. And in some sense, our investment decisions are often partly composed of Slack threads where we have the deck, we have the initial notes from the initial meeting, and then there are other calls made, there's customer feedback gathered, there's various things that are adding to this thread. And we are having an active discussion in a written format. And then that's complemented by an active discussion in Zoom calls every week or more frequently, separately, and face-to-face meetings that we have on sort of a monthly basis or so as a whole team. And so, we're putting all of this together to execute investments. We feel that we can do this fast enough and that we have sufficient time face-to-face for, yes, I agree, there a different kind of discussion face-to-face, but we have to make the effort, fly, meet, sit down together. And, these are important times to be spent together. I definitely believe that they're valuable, but I do believe that we can do this successfully, not being in the same office all the time. For us, it would be, we're weighing two things. So the disadvantage would be if we all sat in Tallinn, then I'm not in Riga day to day, right? So that's the trade-off that we're making.
How is your decision structure in terms of does it require unanimity, or is it just one partner that likes a deal and that partner can then bring it forward and bring it through? Or how do you go about that?
So we have a consensus model. It's baked into our LPA. We are gathering sort of a collective decision. At the same time, we are trying to be very thoughtful about not having groupthink and about taking enough risk and about how we ensure that we don't sort of regress to the mean and that we're still taking enough risk of the investments that are not obvious, right? And so this is a constant challenge.
Could you expand on how you try and force that into you?
I don't know if I have a great description, rather than it is an attitude that we are trying to maintain and that we are being open to telling each other that, look, are we being too conservative in sort of regressing to the mean on this discussion about this company? We're just raising the topic again and again to try and remind ourselves. I don't know if we've figured out anything better right now than that. At the same time, there is value in consensus. It puts the burden on the deal champion, and we have kind of a deal champion format. It puts the burden of the deal champion to convince the others. And that is, I think, an important discussion process to follow.
Okay. We are reaching the final section of our interview. That's a quick fire round, Andrus. This is basically a couple of questions where we are hoping for quick answer questions, 30 to 60 seconds each. Are you ready?
Yep, ready.
So first question. In the Baltics, what areas or sectors, verticals, subsectors excite you the most that you'd say other people really don't feel that excited about?
The obvious ones that most people see here are fintech, but the one that I personally am very excited about that is maybe not obvious is robotics. And that's partly I've done 2 robotics investments here, 3 robotics investments in the Baltics. So Giraffe 360, which is a company reinventing the way digital content is produced for real estate agents and brokers, as well as Aerones, which is reinventing how wind turbine inspection and maintenance of wind turbine blades happens. I think there's amazing opportunities for taking very well-built robotics and turning them into business models that are very successful. In these 2 cases, one of them has a subscription business model, one is a service business model. Neither of them are selling robots. They are incorporating robotics into their business model and reinventing the way that their target industries actually execute and operate. And so I think there's tons more opportunities for that. And so still very excited to see more robotic startups. Estonia has a bunch of them. You look at Milrem in the military space, or Staria, which is Starship Robotics, the delivery robots. So lots of great companies in this region in that space.
Very cool, very exciting. Second question of the quick fire. What would be your top tips for emerging VCs who are fundraising?
Get some real investments into the fund pre-closing so you have something very tangible to talk about. That's the best thing you can do.
For sure. Third question and final question. What can we expect in the future from Andrus and from Change Ventures?
So you can expect more Baltic unicorns. You can expect more investments in this region. And I think we're just seeing the beginning. We have this thesis that this region is going to look like Israel in the future. We expect it to be a leader in Europe in terms of generating startups and big scale-up startup success stories. So expect many more of those.
That's amazing. Awesome, Andris. Thanks so much for joining us today. It was awesome having you here.
Super, thanks. Appreciate the time.
4 Degrees is the VC relationship intelligence CRM that helps you source and close deals in less time. Built by VCs who recognize the power of relationship networks, 4 Degrees will transform your network into a living, breathing engine of opportunity by optimizing the deal-making process. To learn more about how 4 Degrees can help you leverage your firm's relationships to move deals forward faster, visit 4degrees.ai/EUVC. Thank you for listening to this week's episode of the European VC, your podcast for insights into the European VC industry. If you love our show, do drop us a review, share it with your friends, and join our Slack community at theeuropeanvc.com/community. And don't forget, if you would like to suggest topics or guests for future episodes, join our community and help make the best pod for everything European VC. And if you're about to raise a fund or an international round, do let us know and we'll be happy to introduce you to relevant investors.